What's up, everybody? Thank you for tuning in to another episode of the CPA Zone, the podcast where we discuss tax strategies and accounting tips for entrepreneurs and real estate investors. My name is Ryan Pulis, and our company, the Pulis Group, offers tax planning and advisory services for entrepreneurs like you. Whether it's bookkeeping, tax planning, or CFO services that you're looking for, we've got you covered. What's up, everybody? Ryan Pulis here with another episode of the CPA Zone. Today we're going to talk about whether real estate agents can qualify as a real estate professional under the rules of Section 469. And specifically, we're going to talk a bit about the Agarwal versus Commissioner case that decided this back in 2009. It's Tax Court Summary Opinion 2009-29. And Agarwal, I may be butchering that name, but that's how I believe it's pronounced. If that's wrong, then I do apologize. So as a little refresher, we've talked about it several times before. Section 469 governs the rules for passive activities. So all of your activities are either passive or non-passive from a tax standpoint. Passive activities have special rules that limit your ability to deduct losses. Generally, your passive losses are limited to passive income, with any excess being suspended and carried forward to future tax years where you have passive income to offset those losses, or you dispose of the activity. So a passive activity is any business in which you do not materially participate. So material participation involves involvement in the activity's operations on a regular, continuous, and substantial basis. The regulations give us 7 tests to show material participation, but the 3 most common are you participate more than 500 hours during the year, you do all of the work yourself, or you participate for 100 hours during the year and not less than any other individual. So we have businesses in which you do not materially participate. Those are passive. And then rental activities are also considered passive by default, even if you materially participate. So that tells us the default treatment for rental activities is that they are passive. Now, there's 3 exceptions to your rentals being treated as passive. You can, 1, qualify as a real estate professional. 2, you have active participation with income less than $100,000. So active participation, much less than material participations. Basically, you make management decisions and own at least a 10% interest in the property. Or the third way is a complete disposition of your rental activity. When you dispose of your rental activity, that frees up those passive losses. Now, our focus today is on number 1, a real estate professional, because that's really what we're getting into with this Agarwal v. Commissioner case, and whether or not real estate agents qualify as a real estate professional. So to qualify as a real estate professional, there's 2 tests you must pass. And if you're filing a joint return, one spouse has to pass both of these tests. More than 50% of your time must be spent in real property trades or businesses. Number 2, the second hurdle is more than 750 hours during the year must be spent in real property trades or businesses. Now, these hours must be material participation hours. So it's not things like education or travel. So under Section 469, there's 11 real property trades or businesses listed. They're development, redevelopment, construction, reconstruction, acquisition, conversion, rental, operation, management, leasing, and brokerage. Now, if you qualify as a real estate professional, your rental income is no longer in this default passive bucket. Get out of the default passive bucket. If you qualify as a real estate professional and materially participate in your rental activities, now you can deduct those rental losses against other active income, like your business income or W-2 income. Now, this Agarwal case deals with the last of those 11 real property trades or businesses that we just listed. That is brokerage, and it addresses whether a real estate agent qualifies under the brokerage real property trade or business based on what they do. Now, in this court case, the Agarwals, there's husband and wife. The husband was an engineer. The wife, Mrs. Agarwal, was a real estate agent, so real estate sales pusher. She had a sales license working for Century 21 Brokerage. Now, on their 20 2001 and 2002 tax returns, they deducted their losses from the rentals and took the position that she is a real estate professional. She met all the tests, 750 hours, more than 50% of her time, and that was based on her role as a real estate agent with Century 21. Now, the IRS issued a notice of deficiency and took the position that real estate sales agents are not performing brokerage activities. So this ended up in court. The court concluded that for purposes of Section 469, the business of a real estate broker includes various things. So we have 1, selling, exchanging, purchasing, renting, or leasing real property. 2, offering to do those activities. 3, negotiating the terms of a real estate contract. 4, the listing of real property for sale, lease, or exchange. And 5, procuring prospective sellers, purchasers, lessors, or lessees. Now, the court found that Mrs. Agarwal was indeed engaged in brokerage business activities because she sold, exchanged, leased, and rented real property and solicited listings. Therefore, she qualified as a real estate professional. Now, this case in the details, they're found in Tax Court Summary Opinion 2009-29. Technically, summary opinions are not precedent setting, but they do give us insight into how the court will view certain things and likely decide in the future. So this is often cited as the support for a real estate agent qualifying as a real estate professional. I myself have handled audits where real estate agents were taking the real estate professional status and got through the audit with no challenge there. Now, just to summarize, this court case, Agarwal, is really specifically dealing with whether or not real estate agents qualify as performing brokerage activities. The court found that they did. So it is safe to assume, if you're a real estate agent, that your work as a real estate agent will qualify as work in a real property trade or business. So that about does it for today's episode. I hope you found value in this. If so, please leave us a 5-star review and hit that like and subscribe button. Until next time, have a great day.
This audio segment was edited by me, Adam Rothstein. If you would like help editing your podcast or narrating your audiobooks, please email me at adamrothstein29@gmail.com. That's ADAMROTHSTEIN29@gmail.com.
So that about does it for this episode of the CPA Zone. Thanks for listening, and I hope you found something valuable that you can take away. We are taking on new clients, and if you'd like to work with us, then go to our website and fill out the client intake form on our contact page. This can be found at thepulisgroup.com/contact. That's THEPULICEGROUP.com/contact.